Francis Tan is the Asia Chief Strategist at Indosuez Wealth Management, joining us live right here in Hong Kong, a studio for a change. And you're traveling, you've been traveling. And off camera, you were just talking about how some investors that you cover in Belgium are actually interested in diversifying their portfolio. They're asking you lots of questions about Asia markets. What did you tell them, and which Asian markets will lead the pack in the new year?
Well, that's a good one. Thank you for having me. If you look at the home buyerness around the world today, if you talk to the typical American household, what is the percentage of your portfolio in terms of equities and even in bonds are basically American names. You see it's a large percentage. Likewise, over in Asia, I come from Singapore. If you talk to a typical Singaporean investor, if you look at the portfolio, you'll be quite a lot of names that are Singaporean names, Singaporean on the stock exchange. Similarly, when I was in Europe in December, we do see a similar trend. If you talk to the average or typical European investor, what are the names that you're holding on in terms of equities? Generally, European equities. But we are now in the world, especially when we see an acceleration of somewhat of a deglobalization, fragmentation of trade, fragmentation of investment ideas as well. I was telling them, well, don't put all your eggs in one big basket that you know so familiar. So in behavioral finance or in behavioral economics, there's always this thing called the home buyers. You know best, you keep hearing them in the news, you read them in the papers, so you tend to want to have more of them in your portfolio. So I was there to give them a fresh angle, coming from Asia and having an Asian face as well, to give them a fresh angle to what I'm really seeing onshore in Asia, especially if I've been traveling around in Asia and particularly in ASEAN as well, to give them some insights to where I have been and what I'm looking at, what I'm researching into, that could be a little bit different from what they are, in fact, reading in Europe. So this time around, I think that's good. And of course, if we are talking about laggards or leaders, I would like to give you a quick answer right now.
Sure.
The quick winner in this will be those big economies that they have been using the past couple of years to buff up themselves in terms of getting into a strong economy and also fundamentals. Now, that seems a bit of a big question mark over there. Who is that? Actually, we are here. Is it China? Over the last couple of years where the world was locked down during COVID, China, quite silently to the rest of the world, has been buffering up very strongly in the technological front. The DeepSeek moment from last year is just a very small way for us to see that Chinese technology has gone up in a big way. I was looking at the car exports, and I was showing this to my Belgian clients as well. Car exports in the world, the leaders used to be Japanese cars, South Korean cars, American cars, but guess what? China overtook them. Every single month, Chinese exports of cars is around, it is to a tune of 600 over 1,000. The next one is just half of that. German cars, of course, as well.
So number one, thanks for bringing back some memories of behavioral finance classes back in the days. And yes, China has been really quietly not doing bad in 2025 either, but what's going to be the extra leg up? Is it going to be AI? Is it going to be the self-sufficiency drive? And what is the right exposure that you're recommending in China then?
So the right exposure is to, first of all, to even know more about China, or rather know more about Asia as well. So if you are in a particular geographic region where you indeed have a home bias, I'm talking about not those based in Asia, but outside of Asia, it is indeed time to relook. We're at the start of the year, and what do we do at the start of the year? Either we go for an annual medical checkup, or we go for an annual portfolio review. I think looking at your whole portfolio for your wealth is as important as looking at your body. Your annual medical checkup is really as important. So I think it's a good time to do a health check to a portfolio to see where your concentration levels are. If you, because of the rising equity prices in 2025, are now a lot more overweight than your risk profile prescribes you, it is time to take some profits off the table. Be disciplined about it. Have a disciplined investment strategy. Don't let greed rule your head and, I think it will rise up further. Don't do that. Take some profits off the table to your prescribed risk profile and then put them into some of the hedges that you can think of.
Marty, come in on this.
Francis, good morning. Great to see you and belated Happy New Year. So this whole issue of home bias, I would hazard a guess that a lot of investors in many or maybe even in most parts of Asia, right, although there is the risk of home bias, they actually have a lot of their, as you put it, eggs in the U.S. basket. Everybody wants exposure to the S&P, right? So let's talk about the U.S. market and the outlook, especially in light the big thing that we're waiting for, which is going to probably, we'll hear more about tonight, Asia time, which is the Supreme Court ruling on whether or not President Trump's tariffs are constitutional, whether or not they're legal or not. What are you expecting, and what are you expecting market reaction to the ruling to be?
If you look at it, Martin, one of the explanation for the rise of the U.S. stock markets is not really similar to the robust U.S. economy. I mean, if you look again today at the composition of, in fact, the S&P 500, they comprise of some of the best companies in the world that derives quite a big part of their revenue from the rest of the world. So even if the ruling comes out and even if it's going to dent the U.S. economy a little bit, I don't think it's going to move much the trend of the S&P 500 because, as what I mentioned just now, a lot of them derive revenue. I mean, look at the top 10 market capitalization; they are deriving revenue from the rest of the world. So I think that the key thing that has been pushing up the S&P 500 is just because they are global champions and not a particular US champion or a regional champion. So I think the market is going to be quite agnostic to the ruling that's going to come up later.
Really? Okay. So because a lot of people are pretty worried, right, that if the Supreme Court rules outright that the tariffs are illegal, that he couldn't or shouldn't be using IEEPA, the Emergency War Powers Act, to prosecute the tariffs, that's clearly going to deprive the federal government of a lot of revenue from tariffs. They're going to have to issue more debt, and that could immediately send yields spiking and, conversely, equities down pretty sharply. You don't think so?
Even so, I think it's going to be quite a knee-jerk reaction. I do quite agree with you that the use may pop up because of quite a quick reaction to how the revenue is much lower now because if there's no tariff and going ahead. But I think overall trend, like I mentioned just now, the S&P is really fueled by this AI, which is basically deriving revenue from the rest of the world. That should be a moving bus on its own. In fact, for the rest of the world, if they're going to overrule tariff actions, I think for the rest of the world, it will be a sigh of relief. And I think perhaps we even see outside of the US, global equities doing even better, especially those who had been hit by a much higher tariff rate.
How are you thinking about oil and energy space? And obviously looking at 3 years of bear market in oil prices, and people were just not really thinking about this, and then this Venezuela thing happens, and I understand that you don't really see much impact right away, but if it triggers some kind of special operation with Iran, for example, that could be a different story. Do you see some kind of a weird sort of mean reversion story for oil and energy stocks?
Well, I guess the oil price that we've been seeing trending lower over the last 2 to 3 years is merely a reflection of how the global economy has been slowing. I mean, if you look across the World Bank to the IMF, increasingly they have always been coming up with a lower forecast for the year ahead. Oil prices definitely reflect that. I mean, if you don't see a vibrant global economy, it's really hard to see oil prices moving higher because it's so much used in households or even in industrial production activities. So while near-term, short-term supply shocks or even longer-term more supply in the pipeline do affect the oil supply story, but at the end of the day, it's a demand as a supply story. Demand, is it going to be strong? And it seems like over the last couple of months, we've been hearing, GDP has been revised upwards in Singapore, in US, but that's really mainly because of the increase in the I portion. The I is investment into the infrastructure for AI.
Gotcha. Francis, great to see you. Thank you. Appreciate it. Keep warm, safe travels, and see you again very soon. Francis, Tom there.